Look, at the end of the day, we're seeing people come back into the labor force pretty dramatically. We still have the other issue that hasn't been discussed, whether or not women staying at home to oversee their children's hybrid schooling, which has yet to come to an end, is constraining participation. So I think there's a lot of noise in the data. I don't, like Steve, I don't necessarily agree that it's the higher unemployment benefits keeping people, from going back to work. Nobody wants to stay on the dole forever. And so I think that, they may have missed the number, but they've also missed the trend, which, having been out and about lately in New York City and New Jersey, you see that business is picking up and that you see that people, particularly in those hospitality jobs, are back. And they're not high paying, as Steve pointed out. So, look, I think the number is just probably an aberration, and we'll see stronger figures down the road.
Stephanie, either weave in a thought about the jobs report today, or maybe more pointedly, let's talk about earnings and why the market doesn't seem to be responding, particularly to great earnings, or really even to not so great earnings. Why? Yeah.
Well, I'll just touch one point on the non-farm payroll numbers and the revisions. Certainly disappointing, like everyone's talking about, but it's backward looking. And you have to look more at initial claims, which is the leading indicator. And if you look at the PMIs, all the employment pieces within the PMIs, they're going higher. Weekly staffing is going up. JOLTS are over 7 million. Those are more leading indicators. And so I think it's kind of silly that you would believe manufacturing fell 18,000 because you do have, yes, maybe it's chip shortages. But, you look at the regional manufacturing series, you look at the PMIs, ISMs. So I bet these numbers get revised higher. Doesn't change my view at all. On earnings, well, Tyler, we've had a really good run, right? I mean, the market, the S&P is up 84% from the lows. And expectations were quite high headed into earnings, and comparisons were so easy. And so I think people are saying, they look good because the comps were so easy. But I still think you're going to see strong double-digit earnings throughout the next couple of quarters. So I think you buy the weakness, especially when the earnings are going higher and the earnings reports are good.
Shepard Smith here. Thanks for watching CNBC on YouTube.